Good morning. This is Tom Alexander. It is Sunday, August 6th. It's about 8:20 a.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekly video update that is an addendum to the report that you can access, that you should have received an email notification of. If you would like to receive those email notifications and you are not, please send me an email to tom@alexandertrading.com. I'll put you on the list. It's free. You'll get free information. You get notified when I post something like this or the free report. You can also go to, and here I'll show you, alexandertrading.com. And do this. You can go to the website, and what you can do, here's the website, alexandertrading.com. Click on Weekend Update, and you will see past weekend updates, past special reports, and it will give you an opportunity to see a progression of the analysis, how it's formed, the logic behind it, and whether or not it's accurate. Okay, let's start with the markets, the stock markets. We finally have some bit of evidence of at least a short-term top. This has been overdue. I've been talking about this, and again, you can go back and you can look at the weekly reports, and you can see the basis for that discussion as it progresses throughout this period. Let's look at the charts. Are you seeing the charts? Yes, you're actually seeing the charts. Good. Okay, so this is the S&P weekly, obviously. We're less than 5% from an all-time high from the recent high. You can see last week was a down week. Let's just go through these. Now, the thing I want you to know is how vertical the indices have been off of this April low. I mean, it was basically vertical, about as vertical as in that time frame as they get, and I'll address that again from another perspective in a minute. The NDX, as you can see, it was certainly the most vertical, and it has come in some now. So what I guess the bottom line here is what we're seeing now is normal. Now the Russell still has a different structure than the other indices, a different structure from an auction market perspective, which is the lens through which we analyze and trade markets. But the Russell is reversing now from the lower extreme of an upper key reference area that is absolutely critical. And then, of course, the Dow, which I don't think most people realize, it is the closest to an all-time high of any of the four. Okay, if we go down in time frame, and these charts are posted, by the way, on the weekly update on the website, so you can look at these levels. To the downside now, the Dow is actually in an elevator shaft that extends down into this area. All of them are pretty much in an elevator shaft. The level in the SPX, we're just in the upper extreme. I would expect to see lower prices. Now, one caveat there, we've had 4 consecutive down closes. It's really rare to have even 4, frankly, before you get some sort of a bounce, some sort of retracement with a higher close. Now, it doesn't have to be anything dramatic, but I'm just saying that it's rare to have 4 consecutive down closes. Much more rare. The consecutive down closes streaks are typically don't get nearly as extended as do streaks of higher closes. And then let's see, what have we not looked at? The Russell daily. Now, if the Russell still has not taken out last week, week before last high, a low, but it's on the cusp of it. And if it does, it will join the other 3 in an elevator shaft to the downside. The NDX, There's really nothing in the NDX between here and then you're guessing at this pivot or you're guessing at this pivot, and that's because the NDX was so vertical off of this April low. Now, I think the most helpful view right now is from the profile graph. Now, the profile graph is certainly probably the most misused, misunderstood, misinterpreted, misapplied tool that we have. The profile graph is just that. It's a graph. It's a graph that organizes data in a specific format that highlights trade activity on the horizontal scale. It was intended, and it does depict the auction market process of development. So when you use it with that in mind, and you're using it to identify market condition, the market condition of an auction market, there's a three-step process. A step one, a trend, a stopping price, and the stopping price can only be identified in hindsight. Development around that price, then the process starts over. And this is the auction market development process is in effect in all degrees of time all the time. It can be extremely helpful. So what we have seen, and if you, this would be a great opportunity for you to go back and look at the past 2-3 weeks reports, because I have done and have discussed in detail the progression of this three-step process in different degrees of time. And we have been in vertical development in a monthly and quarterly basis, and now we seem to have stopped. This is the stopping price and be developing now. So there are different paths the market can take from here. Let's go down 1 degree of time into a monthly. Now this is the monthly view. So we can get rid of, let's get rid of this. Then when I say monthly, each letter is 1 day of trade. No, daily. That's what I want. Now, this is monthly. So each unit is each profile unit is 1 month. Each letter is 1 day of trade. This is what I wanted. Now, there are a number of different paths this market can take, but the levels that we see on this chart, I think, are really important. I would be a little bit surprised if we trade much below 40, if we were to trade much below 4,400 before you get some development back towards this high. Now you can see the August auction has really just begun. We just have a few days of trade, 1, 2, 3, 4 days of trade actually in August. So it is a very new auction. It's traded into this area of low volume on the horizontal scale into the previous auction, the July auction, but the lower half of the July auction was pretty undeveloped. So where are we right now? It's too early to tell, is the bottom line. But we do have evidence that a more two-sided market has begun really in all time frames, and hopefully that will help us going forward. Let's take a quick look. What that means is a more rotational market on a day-to-day basis and intraday as well. All right, if we look at the internals that we look at every single week, sometimes there's good information here, sometimes there's not. At the moment, it's getting a little bit interesting. You can see how we had a series of divergences that dragged on and on and on up here in the 10-day moving average of advancing issues, as well as the 5-day moving average of advancing issues. And now those have rolled over, and they're nowhere near extremes yet. But if we were to see some hard selling at some point next week, it might bring these into an extreme, which would be an interesting situation, and it will be something that we will discuss here. Okay, guys, I hope you have found this helpful. If so, please subscribe, please like, and enjoy the rest of your weekend. I will see you at a minimum next week, possibly sooner, if something shakes up that needs to be discussed.